Hi and welcome to the online edition of Pitch Nights by Eureeca. My name is Siddharth Dalamal, and as Head of Investor Relations for Eureeca, I'm delighted to introduce you to 5 of the businesses pitching on our platform. These 5 businesses span multiple sectors, including sustainable fabrics, electric vehicles, no-code platforms, recruitment tech, and media. Each business will pitch for 10 minutes and then have 10 minutes for Q&A. There's a Q&A box on the screen in front of you, so please feel free to enter in any questions there, and we will endeavor to answer as many of them as possible. As I mentioned, all 5 businesses are currently raising on the platform, and you can also email us on investors@eureeca.com. Please note that these investment opportunities carry risk as well as reward. So without further ado, let me introduce our first founder, Amar Devinter. Amar is currently in Bali enhancing the supply chain for his bamboo apparel company, Nooboo. Amar, the floor is yours.
Thank you. All right, good evening. Let me introduce myself first. Hope you can hear me clearly. So my name is Amar Devinter. I'm 35 years old, founder and CEO of Nooboo Amsterdam BV. I'm responsible for the marketing and sales. Nooboo is a sustainable bamboo clothing brand for the new century. Established in 2017 in Amsterdam, we produce in Bali and Portugal. So yeah, why bamboo? So it's a sustainable fabric with amazing features. So these are the 12 most important bamboo features. I just like to name 3. So yeah, the Nooboo bamboo fabric is breathable and moisture regulating. So it makes it really great for sports. It's 100% biodegradable, and bamboo grows super fast, 1 millimeter per minute. Then I would like to give you a quick overview of the collection. We have already more than 400 SKUs. We are making now 100% bamboo face mask. You can put the branding on the inside or outside, and we had a great market response here. These are the 60% bamboo shirts for men. We do 3 styles: crew neck, V-neck, long sleeve, 5 sizes, 8 colors, and the pricing is €35. Same for women. Then we also make 100% bamboo shirts like I'm wearing myself. These are natural dyed with plants in Bali. This is yeah, expensive process, but people really like it and yeah, like to buy our clothing for that. It's 14 times more expensive to produce like that. So this shirt cost €55. And same for the ladies. And we have a new color, pink now as well. 100% bamboo sweaters made in Portugal, and the pricing is €125. In 3 colors. Okay, so let me show you real Nooboo customers. So the first 2 are millennials. So yeah, the first one, he liked to buy for the cool features and the brand. The second one is a mom. She loves to buy for the sustainable aspect. And the last one is a baby boomer, and he loves the comfort. Yeah, so ethical production is in our DNA. We ship all our orders plastic free. Our bamboo plantations are owned and run by locals. And fair trade, so we pay people a fair price. So the kids of the tailor can go to school and people can have a life. Furthermore, for every shirt you purchase, a bamboo tree is planted in our Nooboo bamboo forest in Ubud, Bali. Yeah, to tell you a little bit about the market. So for people between 25 and 35, by 2021, they are projected to spend $150 billion on sustainable products. E-commerce is of course growing. It's important for millennials. So this is yeah, a growing market. The business model. So our profit margin is always higher than 75%. New customers we get via partner websites, for example, bol.com is the Dutch Amazon, Google Shopping, Facebook ads. Partners receive 15 to 20% commission for their sales. Yeah, just to show you quickly. So for the first order, on average, people buy for 79 euros. And you see the basket size is going up when they trust the brand, when they love the brand. So yeah, this is great to see. We have a good number of repeat buyers. And the customer acquisition cost is around 25 euros. Okay, so we grow with partnerships. So we do that with, for example, sport communities, with students. We designed a t-shirt for the Plastic Soup Foundation in Amsterdam. In this picture, you see Dorian van Rijsselberg. So he's 2 times Olympic gold winner. So this was a nice moment for our brand. Achievements are, yeah, we have now more than 13,000 Instagram followers. We do wholesale orders for lifestyle brands in the USA. And we did 2 successful Kickstarter campaigns. Overview of press. So we have been on television, radio, online, of course, magazines. Yeah, use of funds. So the main use of funds, 40%, is to operate from our own showroom and distribution point in Bali. So for all orders outside the EU, this allows us to distribute way faster to Australia and the Middle East and lower shipping costs. And this way increasing the margin. All right, so about the revenue forecast. So 2018, 2019 are the real numbers. This year, with multiple sales channels, we will hit the target and we will grow 100% compared to last year, despite COVID. A little bit about my background. So a while ago, I worked for Spar International. There was, this is in food retail, there was retail development manager in 3 countries. My expertise, supply chain management, partnerships, and branding. Yeah. And then to show you the team. So we have the team in the Netherlands and the team in Bali. Yeah, what I would like to explain to you, we are not a bamboo wholesaler. We are building a global brand around bamboo. Nooboo is registered in 22 countries for brand protection and trademark rights. And furthermore, yeah, we emphasize a lot on design. We have a lot of creatives, critical for our growth, content-led, and yeah, for our social media channels. So why now? Yeah, with our 78 best-selling SKUs, we want to sell this via Amazon USA with Amazon Prime, and also do fulfillment with Amazon so people can get next day delivery. We want to expand the product range and colors. Also introducing new categories, so Nooboo Home. 2 weeks ago, we launched Nooboo 100% bamboo kimonos and pants. We have the towels, bed sheets in the pipeline, Nooboo Active, so focusing on sportswear, and also Nooboo 100% underwear for men. And of course, the showroom, as I mentioned before. Yeah, so as a reward, we like to give all investors a 20% shopping voucher. So for example, if you invest 2,500, you have $500 shopping credit at nooboo.co. Here's some examples, so you can choose the different fabrics, try the different fabrics and really feel the comfort. 60% bamboo shirts, 100% bamboo shirts, the sweaters, or the kimonos, so whatever you like. So you get a shopping voucher, and in the future you will always get 50% off retail price. So yeah, for yourself, family, friends to try. Yeah, so so we are raising $125,000 at an attractive valuation of $1,050,000. We have raised now 53,000. Yeah, let me know if you have any questions.
Thank you, Amar. And that was a great presentation, and I'm sure it's very valuable to all the investors that have come along. So first of all, let me say thank you to all of the investors that have dialed in. I can see we've got quite a nice crowd here, and we've got some questions coming in. So let's get started with those. The first one from Mohammed, one of our sort of VIP investors, is asking, so who is your competition and what is their market share? And maybe you can start by defining what your competition is, whether it's bamboo companies, other sustainable fabrics. And then the second question is, what is your target market share in the next 3 years?
Yeah, so in the Netherlands, there's one big brand called Bamigo. So they are one competitor. We have in the US, Cariloha, but we are really focusing on the sustainable. So our price range is a bit higher. I believe that's the reason why people love to buy our products. So yeah, in terms of market share, we want to be in the sustainable bamboo branding. We want to be to have 50% market share.
Okay, and how do you, I guess the follow-on question from that is, how do you intend to differentiate yourself from others? So that's also from Mohammed.
Yeah, so right now we do that with the fact that we focus on the sustainable aspect. We produce in Bali. We focus on the natural dye, as I mentioned before, paying fair salaries. So I think people really like our story. I get every week emails and messages of people like, hey, I looked all over the internet and your brand really is standing out, really love to do internship with you or help you with the magazine or with the article. So I feel like people really like the story. And for example, the brand I mentioned before, Bamigo, they not focus at all on sustainability, but they do sell bamboo. And they also not have that story, that feel that we have been building since 2017. So compared to Bamigo, there we really stand out, and there we also ask a higher price, and people are also our customers are fine with that, and still say actually like, hey, your pricing is actually very friendly price with the 35 euros for one shirt.
Okay, and we've got actually, so continue on the financials. We have a question here from Sama. What is the margin and cost of the product? So I think you have a slide for that as well, if I'm not mistaken.
Yeah, let me show you the slides. Yeah, so for example here, for the we sell 79. The cost of goods 12. So this is the cost until our warehouse from started in Indonesia. We ship by boat. It's very low cost. And if you need to really stock up quick, we can fly in, but we like 95% goes by boat. For the fulfillment, we pay 7 euros. It fits in the mailbox. So yeah, the direct answer is, so for the 79 euro, the cost of goods is 12 euro.
Perfect. And I guess, okay, so we have another question here. Well, a couple of questions from the same investor, saying, shouldn't the low cost of production for bamboo and the cost of wages in Bali, the lower wages in Bali make your products more competitive price wise? So I think the important thing here is to separate cost from price, right? So I think that's correct in the sense that your cost is a bit lower, but your prices are a bit higher because of the brand that you're building and the identity that you're building around that and the marketing around it. Would that be a fair comment?
Yeah, it is a fair comment. Yeah, to be honest, actually before the price was, for example, 30 euros, but when we increased the price to 35, we actually saw a rise in sales. So yeah, I think it's very important. Like, and now we have the 100% bamboo shirts. So again, yeah, if you want to buy, like, if you're really on price, you're not going to not spend 55 euros, and we sell per two. So you basically straight away pay 110 euros for 2 shirts. So if you're about the price, then yeah, we're not your brand, because we really, yeah, we go for the comfort. It's like luxury, sustainable bamboo clothing. So it's about the luxury element. We will always, yeah, focus on the sustainable and the fair trade. But we are not trying to compete on price, because that's not our. We are in the mid to high segment, not in the low segment.
Great. And then let me see. I think we've got so I think there's a couple of people putting questions in the chat. If we could do it in the Q&A box, it would be easier to manage there. And yes, we've got a couple of follow-on questions from the same investors. So I'm going to connect you guys offline after the event. And maybe we can have a conversation around that, and we can talk through the pricing and the added value of the brand as well.
Thanks very much.
Perfect. Okay, Amar, thank you so much. I think if we don't have any questions from any other investors, what we can do is, I think we've got one. Sorry, I think we have one coming in. Actually, it's gone to the chat box. Yeah. So the question is, the photos you shared don't have a brand on the shirt. Is there any reason for that?
Yeah, so yeah, all our products, yeah, I mean, for the sweater we have the logo in embroidery, but we actually really choose to not be shouting the brand. So yeah, in my opinion, it gives it more a luxury touch. So yeah, until now we have been very like not showing the brand. So the brand is in the shirts, of course, printed and so on, but you don't show it. Because yeah, our customers, they want a shirt that just really look good, but not necessarily all the time walk with the brand. I mean, that's, yeah, I feel like where we are going to, and it's also great because people buy at once 4 shirts, 6 shirts. So if you have the brand, I think, yeah, people more into buying just 1 or 2, you know, because otherwise you always show that brand all the time, right? So I think.
So I mean, I think that it's an interesting one in that, like, you know my story. I think if you're talking about the quality of the product selling itself, you know that I personally tried a few of the masks and ended up my wife ended up buying about 50 of them, so for friends and family. So I think in terms of quality, it's certainly there. So that much I can certainly say. Aside from the price,
but maybe
we have a no, I think we have another one here actually. So we're diving back into the financials, and what is the basis of the valuation of the company, and how does it compare to other clothing startups?
Yeah, based on the forecast, of course, on the numbers, 2018, 2019, this year, yeah, based on that together.
Yeah, so I think in terms of the growth as well, right?
On a total of 6 years, yeah.
Great. I'm just gonna put that to answer live. So do we have any more questions for Amar, or otherwise we're gonna move on to the next one? And yeah, I can see there's 1 or 2 investors asking multiple questions. So we're going to connect you afterwards to those investors to have a more in-depth conversation, which is great. Amar, thank you so much. It's been a pleasure. If you could stop sharing your screen, yes. We're going to move on to the next presenter. And if you just go on mute. Okay, great. So our next presenter is Adam Ridgway from Moto. Adam's been working on delivering an exciting electric vehicle solution to the UAE and beyond. And that idea is now coming to fruition. So Adam, please tell us more.
Thank you very much. So I'd like to introduce you to Moto and the future of mobility. And I want to start off with a quote that when I read it, really sort of affected me and got me thinking. And that is, we're the first generation to be affected by climate change and the last to actually be able to do something about it. So we're very much focused on the opportunity, mobility, surrounding ourselves with sustainability, not just in the product of electric vehicles, but also that closed loop sustainability, which I'll go through. So we are the UAE's and the region's first and only approved, certified, registered on the road electric vehicles. And 90% of our business is driven by B2B. So that's what I'm going to be focusing on this evening. So the problems or the opportunities we like to think that we solve and address are the environment, investment, time. And as I said, everything is surrounding sustainability. It's not just green labeling what we're doing, but it's a measurable impact. So the greatest killer of humanity, which many may realize, is air pollution. But what many don't know is that motorcycles produce 50 times more hydrocarbons than SUVs or buses. And if we take the UAE, which is our primary market and our primary focus for the first couple of years, we have 15,000 delivery motorcycles. We've all seen them, the Uber, Careem and Talabat and so on, all of those food aggregators. They're producing 16,500 tons of CO2 a year. But that to us doesn't really mean anything. But when I say it's the same as 273,000 trees grown for 10 years, to absorb that amount of CO2 each year is shocking. So the one mission we have is to switch all delivery vehicles in the UAE electric by 2024. And we've got a great relationship with the...
I'm just going to jump in. So we've had a few comments. There's a color panel on the bottom right hand of the screen. If you could just minimize that.
There's a what?
On top of your presentation. There's a little color wheel at the bottom of your presentation. If you could minimize that. We've had a couple of comments in the chat.
A color wheel?
Yeah, it's in the bottom of your screen. It's just, yeah, there you go.
Sorry,
yeah,
thanks
perfect.
Ever so much.
Perfect. Sorry to interrupt you.
No, it's great. I appreciate it. So when we look at how we make a difference and why we're loved, and the government, as I said, we've got a lovely relationship. They're not required in any way to invest in infrastructure because of the way our vehicles are built. So most EV companies require the public or private sector investment in smart chargers and so on. We increase the safety of riders and we meet 5 out of the 6 smart city directives as per the Green Initiative. Operators and aggregators, we reduce their OPEX by up to 50%. And all of our vehicles are built interconnected. So they transmit a huge amount of data, which then provides the government aggregators more of an optimized routing system, as well as the private users to manage their own family of vehicles. So we also increase the rider well-being. And by that, I mean, put more money into the riders' pockets, but also reduce the amount of pressure of the amount of deliveries that they have to do every single day. And the riders love it because they don't have to pay for their own fuel. There are no fuel costs, where currently they can be paying up to 450 dirhams a month. There's no servicing, no maintenance. There's increased safety and training. So from the data that we pull from the vehicles, if a rider's been too aggressive or too passive in their riding, we can offer and initiate training. We reduce the work pressure because as they're working 12 or 14 hours a day, they don't need to do that because they don't have the downtime, which then gives them a higher pay, the less cost of rental that many have to lease their own vehicles. So we look at some research. The UAE food service industry alone is 13 billion. The food delivery industry is $450 million market. So that's really what we're looking at. And it's one of 3 high growth industries. So you've got Meditech, FinTech, and delivery and e-commerce. The stats for the UAE, it's a very high cost of acquisition. It's about 30 dirhams, so just over $6. And the cost of delivery that the likes of us, the customers, pay is around 7 dirhams, so just under $2. And the delivery riders, they're paying for fuel and lease of the vehicle just under $400 a month. And then we took the research a little bit further to find if the values we've built our business on resonate with the values or the sustainable values of the residents of the UAE. So we asked them a question. If you were to order a pizza and that food is delivered at the same time at the same price, would you choose a company that's sustainable or one that isn't? Now, it's not that unsurprising that 99.3% said, I would choose a sustainably focused business. But what was surprising when we followed it up with another question is, would you pay more for that? 76% yes, and it was 5.8 dirhams more that they would pay for a sustainably delivered product. So we're unique. By that, I mean, we have swappable batteries. It's one of our values of convenience. You can charge them anywhere with any 3 or 2 pin socket, depending on where you are in the world. Zero emissions, noise and air, which come, as you know, with all EVs. We have first mover advantage. We've realized that's not going to last forever. That's why we need to capitalize on it now. And we make sure that all of our vehicles produced across the entire fleet are cost effective and will pay for themselves within 12 months. We like to think of them as a smartphone on wheels with data-driven technology, data-driven electric vehicles. And we have demo bikes in the country and on the roads. The app and software that's in development will help, as I said earlier, manage the fleets of the vehicles from the operator level. It also encourages the amount of green miles and measures the amount of green miles, the amount of CO2 reduction, not just CO2, but the NOx and the carbon, and what your contribution is to, say, the environment. When you start multiplying, not just the 1 vehicle or 2 vehicles from an individual, but on fleets, where we're looking at 15,000, that's a huge measurable impact on society, on the environment and the government. And it, I suppose, increases the free PR value that the early adopters of our customers are able to leverage. So our target market, we look at phase 1, and it's the food delivery aggregators, fleet operators that have sort of multiple fleets on a last mile or last minute delivery, but also on long term. And then we're looking at grocery and pharmacy. There's 150 delivery bikes that are just focused on pharmacy deliveries on the roads each day. And we're looking at a 22 million revenue, which equals a 10% market share by the end of next year. And we can achieve this by just replacing the vehicles that are owned by the food delivery aggregators. So that's where we've been able to measure the 10% market share. We only have 30 customers, and we've spoken to around 25 of them so far. And why the UAE? I get this, I ask this a lot. As I said, it's a very high growth market. It's the measurable impact and the vision of the UAE and the leaders of the UAE to make a difference is vast, to really embed ourselves in the GCC and then allow us international expansion. And it's huge mandates that are coming out of the government, and we're working alongside them to possibly offer subsidies and discounts for switching their vehicles to electric. We have 3 exit strategies. We've got private sale in 3 or 5 years, and then we're working towards an IPO on the DFM NASDAQ in 4 years. So we've got a 100-city expansion plan by 2028. As I said, these are some of the sustainably focused companies that we're already in conversations with. The volumes of vehicles to date, as of the start of the start of 2020, we're speaking about 44.3 thousand vehicles for the region. We're going through a raise at the moment with Eureeca, which you all realize because you're here and you joined in. We've won a couple of awards and awaiting the answer on one, which is from the RTA. We won an RTA Innovation Award, one with Dubai Chamber of Commerce, and now we're looking at the 3rd. And we've raised or sold in sales and MOU $871,000 as of January this year. If we look at the cost of ownership, this gives you all of the costs of a petrol vehicle, including the purchase price, the fuel, service and maintenance, even the delivery box, the SALIC and registration. The SALIC, for those that don't know, is the toll, the tag. And you look at the cost over 1 year and then 3 years, just for the petrol motorcycle, of which there's 3 competitors, Yamaha, Bajaj and Honda. And then you take the same cost for 3 years with a Moto vehicle. How our vehicles have been designed are modular. And by that, we're looking at creating a very sustainable ownership option that you can replace your parts of the vehicle, keep the same frame as long as it's intact, keep the same parts, and just replace the parts of the vehicle at any time. So that vehicle is going to last you a lot longer than the 2-year lifespan of the current petrol vehicles. Then we look at the Nissan Urban or the Toyota Hiace, and then you look at those costs, just the purchase price. You can double your fleet in 1 year for the same price as you're currently paying. And that includes the conversions of the chilled grocery unit, if that's what you're going for. So the cost of ownership is far less with electric. So we've got a great team. We've got Faris Al-Mazroui, who's my Emirati business partner. He really pioneered and championed Tesla and to bring them into the region. He's a huge EV enthusiast. He's set up the Electric Vehicle Owners Association, so he's a great team member to have on board. We have Harry, who's Marcoms and General Manager, working very closely with our brand and position our brand where we want to be. And we've aligned our brand with what Apple is for communication, what Moto is for mobility. So taking that alongside Mini for that fun and playful element, and then Ray-Ban for the attitude. That's what we're positioning ourselves with the brand. And then we have Amit, ex-public relations for the public sector and government and Dubai Carbon. So he's very much focused on renewable energy. And then the team extends: engineers, designers, PR, online marketplace that we're looking at the UK. We're in discussions with other countries and cities at the moment. And then we've secured the insurance partner, the after sales, and the dealership. The two missing pieces are distribution for expansion, and then the digital marketing side. Our defensibility: we are first to market. And as I said, we realize it won't last forever. We're certified, we've got the design IP. There's a high barrier for entry. It took us 18 months just to get registered and certified by the authorities here. But our phase one biggest target is making sure that we build a market. Phase two is exciting, and that will come with our proof of concept and proof of market build. And that's where we'll have a UAE manufacturing. We're looking at 3D printed vehicles using recycled material. And we've got this modular design, so you can replace the parts, one vehicle, just keep replacing the parts, and you can have a new vehicle when you need. If we look at the timelines of success, just over the next 12 months, I've made bold a couple of the sort of pivotal landmarks. And we're looking to finance with a partner to offer a lease to own option, so a credit facility for a lease to own. We're looking at 180 biker sales, which are the delivery bikes, by Q1. If we could take that to Q3, we'll double that, or over double that to 500 sales. And then we will achieve 10% market share. And we'll be looking at pre-selling 5,000 of our new 3D printed recycled vehicles. And then some of the milestones include various different relationships and country launches. The investment: we've got 6 items on the left of where we're going to be spending the raise, and that's also including the 2,750 vehicles, the revenue that we're looking to generate to acquire that 10% market share. We operate a negative cash conversion cycle, and we operate a 46 to 52% profit margin. The financial model: in terms of vehicles, there's 4 revenue streams. So direct sales, 1,500. Leasing, we'll be looking at 2,250. That is dependent upon our credit finance and the partners that we're in discussions with, hopefully secure that by the end of October. And then battery banks. This is adding to the convenience, where a rider within 10-20 seconds can swap out their batteries for a fully charged one and carry on for 100 dirhams a month, so around $36 a month. That gives us a residual income. If we just sell a vehicle, we're not going to be seeing our customers for 3 years. We need to make sure that we have that residual income. And then we'll be looking at dealerships. So by the end of next year, we'll be expanding through a dealership and distributor network. And this is how it works, or this is how those numbers translate into financials. So where we are, we're currently a pre-money valuation of $8 million. We're raising $500,000. We've got a very dominant position with our first mover advantage. We've got pilots confirmed with some of the region's largest players. So thank you very much for your time, and I'm open to answer as many questions as I can.
Thank you, Adam. And we do have some questions that have come in immediately. So the first one, so our head says, what is the range in kilometers for the delivery motorbike per charge?
It's between 150 and 180 kilometers, depending upon where you ride. So as you may know, the inner city rides will get more kilometers or more range. When you're on the open road with all EVs, that reduces. So it depends on the riding style, but also we've got this wonderful formula. And we actually started building the bike with Kareem. We said, what do you need from a delivery bike? And range was very important. And then we had to get that equation between range and speed. And currently, in the market as it stands, no one has got the same range and speed that we have.
Great. And then we've got three questions from another investor. So first of all, what is your background? Where do you manufacture your products? And what is your margin? So we can take those one by one, I guess. So maybe start with the background.
Yeah, so my background, I've had 20 odd years in media. I've run my own media or selection of 4 media agencies, successful startups, all modest, but they're built as lifestyle businesses. So media in Dubai for the past 12 years now I've been here. And one was a video production, one was an advertising branding agency. We have a casting agency, which was the first time in Hollywood history casting was done for a feature film online. And then Travel, which was a video content production company for the travel and tourism industry. That's really my background.
Okay, and then it was where
the profit margin was 40. We've got a contract with a factory in China that produces all of our vehicles exclusively for us. And I said that's phase 1. Phase 2 is then looking at a UAE manufacturing plant. Although we have been approached and in discussions very, very early days with potentially opening up a part manufacturing, part assembly plant in Saudi. And a profit margin 46 to 52%.
Perfect. Okay, so I think we've covered those 3. So some questions on the batteries. How long does the battery last on average, and how long does it take to fully charge?
Okay, the last in terms of lifetime, we've got a guarantee of 1,000 cycles, which is about 3 years, and it takes around 4 to 6 hours to fully charge. So if some of our customers are buying multiple batteries, so they can swap those in and out. There's the charging time of 80% charge in 1 hour. So some of the delivery riders and those bikes that are already on the road, they charge during the lunchtime or in between shifts or deliveries if it's needed.
Great. And okay, so who would you consider as your competitors in the UAE?
If we look at direct competitors, as in, like for like, there is no one else that's registered. Vespa, who I hold in the absolute highest of regard, I've owned several of them over the years, they can't get registered because their vehicles don't meet our criteria. So we really were and are first to market. However, I'm not saying that we don't have competition, we do. That's Yamaha, Bajaj and Honda. I'm not looking for One Moto to compete directly with them on brand, but when you start looking at the cost saving, and then 40% of our customers actually have a physical sustainability mandate they need to work to. There's very little that they can do other than the packaging for sustainability, recycling, biodegradable products and materials. The one thing that they can do is offset their emissions by reducing their cost of operation by switching to electric. So I suppose if we looked at who has the biggest fleet with the cash flow to be able to lease out vehicles as they are doing now, Easy Lease is the biggest player in the market. Got great respect for what they've built, and they are going to be, I suppose, going into some level of consideration of are they going to be switching to electric if their customers are asking for it. But that will come to a CapEx, OpEx. So do we try and raise the CapEx to be able to do it ourselves, or should we collaborate and partner with them is the question.
Great, thank you for the thorough explanation. I think that should answer that one pretty well. And okay, another question here. So what is the speed of these vehicles in comparison to those competitors?
So 85 kilometers an hour is the speed. And when we started building out the ratio, we can tune them. It's not really tuning, but we can program to go up to 120, but then you get a lesser range. So range was important across every single one of the 30 customers or the 25, 26 customers we've spoken to. Speed wasn't. So it's registered on the roads, the RTA, everything's approved. So that's where we are now. We cannot get a vehicle that goes any faster because technology just isn't there. But the good thing is the way we built the vehicles being modular, when it is there, we can apply it. And it's very simple. It won't affect our roadmap at all. It'll just make it more effective, I suppose.
And do you have any, okay, another question come in. Do you have any competition directly from the Chinese? So I think, you know, as you mentioned, you're manufacturing in China. Are they able to compete with you here and abroad?
I'd say it's a really good question. I'd say, yes, anyone can compete. if you look at it, you know, Renault compete with Nissan, Nissan compete with Honda, and so on. So yes, of course, there's going to be competition. If you look at the Asian market, many of the say Chinese producers of anything focus on their domestic market because it's far greater, far easier. Everyone knows the landscape, the language, the culture. So there aren't any Chinese manufacturers that are producing for the international market, or certainly the Western market. Even if you take the size, frame, shape, performance of those vehicles that are available, they're smaller, they're lighter, they don't go as fast. There's a lot that they don't have. So yes, in time, will there be competition? I genuinely hope so, because it'll help us raise our game. But for right now and for the foreseeable future, there's no one.
Okay. And we've got another one here. So, okay, what's the average lifetime of a one motor bike without any of the parts failing? So, and then brackets, how reliable are one motor bikes compared to traditional petrol powered bikes?
Lovely. I would like to answer that in two parts. So the first is the average motorcycle that you'll see on the roads have around 4,000 parts, and our vehicles have about 105. So the accessibility of changing anything that has got a problem, it's a vehicle. Of course, there's going to be issues, even though there's no service and maintenance. Of course, there are going to be some hiccups along the way. We can change because of the after sales relationship we've got with the dealership. They can change out the parts very inexpensively because we've pre-purchased a large volume of parts. So there's always going to be parts available. And the lifespan of the vehicle, because it's such new technology, we don't know. We have a 3-year, 2 and 3 year, depending on the parts of the vehicle, warranty across absolutely everything. And we're also in the we're working out the economics of creating a 1++ care package. So within how that works is for I can't do the dollar equation, but for 1,250 dirhams a year for 5 years, we will then replace all of those parts. So 1,250 dirhams paid per year for 5 years, we will replace every single one of those parts and give you a brand new bike at the end of that term, which then helps us keep raise the residual value. It ends up guaranteeing that we have a far greater second-hand market in terms of value, and we won't then have a flooding of, say, the petrol vehicles. They have like $2,000-3,000 dirham resale value after 3 years. So they have a lifespan of 2 to 3 years. We're looking at a lifespan of 3 to 5. I hope that answered the questions.
Yeah, and I think those are pretty comprehensive answers. So thank you for that, because I can see that we have a lot of interest, a lot of questions coming in, which is fantastic. So the next one is about the valuation. You have an $8 million valuation. How did you arrive at this? So I know that we have a DCF sheet that we can share, which, let me just say, is on the Eureeca platform. So if you go on there and you're registered as a user, you can go and request access to the private document. There's a document there that breaks it down and explains it. Of course, it is reliant a little bit on sales forecast. So without having to pull up a spreadsheet and go through every sale, maybe you can tell us a little bit about the sales pipeline and how that feeds into the valuation.
Thank you. Yeah, so we've had the company valued independently 3 times, and one of those was discussions with Eureeca of how do we position ourselves, and with a VC firm and then a separate advisor. And as many investors know, anyone that's gone through this, there's so many different variations of evaluation, and it's really what suits and what doesn't. One thing that I am is very conservative. So with the conversations I've had, I'm also very optimistic, but the conversations I've had are around 44 or just over 44,000 vehicles. When we start looking at just the food aggregators, and we're only talking delivery vehicles, we're not talking about the rest that are going through the screen now. We've only forecasted on delivery. We realized that the fleet managers, fleet operators have a contract. Usually they're about 2-year contract to lease out the petrol motorcycles currently. But most of the companies, if not all of them that I've spoken to, have a certain amount of fleet and they own, so that liability or asset. And what we're doing for our conservative 10% market share is just focused on transitioning out the current liability, which are between 2 and 4 years old. Some are 7, but most of them 2 to 4 years old, switching just those out and basing those figures alone and just focusing on the UAE market, we've come up with that valuation. When we start expanding by 2028, we want 100 cities, 100,000 vehicles. No one actually knows where we're going to be in 2028. Are we going to go through a private sale? Where's the world or where's the economy going to be? So we've been very, very conservative on the figures and the revenue that could potentially come in just from the 44,000 without being overzealous or over optimistic. We're really scaling that down to, I think it's around the 3% conversion rate. Now, if we can't convert more than 3%, I'm personally in absolutely wrong business, and we're not a business to invest in. 3% is shocking. We're actually selling vehicles to customers that haven't even seen them. We've got a new shipment of demo bikes coming in the country at the end of October. So anyone that's in Dubai, more than welcome to come and have a test ride. So we are looking, I believe that 1,500 vehicles will be achieved by Q1 next year. And I believe that the 10% is going to be closer to 20 because of the government stimulus. But that's really where we're sat.
Perfect. And look, I understand we're running a bit short on time, Adam, but we have got a lot of questions coming, a lot of interest. So I'm going to try and do this a little bit as a quick fire round, and then we're going to also be able to catch up with some of these investors offline as well. So we'll keep these questions. If we don't come to your question, we will reach out to you after the event. So yeah, a bit of a quick fire round. What is your plan to improve the efficiency, i.e. increasing the kilometer per charge?
That will be down to battery technology.
Okay, so the modular aspect that you mentioned, you'll be able to swap batteries in and out. You'll be able to
absolutely.
Swap
so if the batteries get more powerful and smaller, we'll just swap out our supplier. We've done it once, so we can just keep doing that again because of the way the batteries are, the vehicles are built.
And how quickly can you satisfy demand with your supply chain if your forecasts come true?
Currently 3,000 units a month, but we can extend that with an extra production line to 10,000 a month.
Okay. And okay, again, on charging, can the drivers charge their own bikes, or do they need a proprietary charge similar to Tesla?
No, absolutely. They all charge with a 3-pin standard 240, 110 volt, depending on where you are in the world. And you can either charge the bike straight away just by plugging it in, or you can take the battery out, replace it with a new one, take the battery out and plug that into the wall. So you've got various different options.
And what is the life of the battery? So it says Tesla gives an 8-year warranty. What's yours?
It's 1,000 cycles, which is about 3 years. That's manufacturer's warranty from the manufacturer of the battery.
Got it. Feedback on the vehicle so far? Have there been any issues with reliability? And I think the warranty part, I think you've answered already. But any feedback? So any issues with reliability when you've tested these with customers?
No, there's been no negative feedback. There's been only the shift of, do we go for a CapEx or OpEx option? Is there something that we can do for credit finance, for lease terms and so on? That's been the only, I suppose, bottleneck in conversion. There's been, I've personally tested, these vehicles are built for the hot climates. And if they work in hot climates, then they work in cooler climates as well. So I've personally tested them for 3 months during the summer in Dubai. And as we all know, it gets up to around 50 degrees. So they're built for this climate, which is a very, very important factor.
And where are you producing the batteries?
The batteries are produced we were using Panasonic, and Panasonic weren't producing a battery that were up to the needs of us. So then we switched to LG. We've got the ability to switch between battery providers according to who are producing the best. So currently our battery providers are LG. Okay.
And have you made any arrangements with the banks for the leasing part of your business? And what kind of financing do you anticipate you'll require?
So we operate negative cash conversion cycle, so we don't actually need cash for operation. It would only be for the leasing. And because we only launched in December last year, so 2019, we are a bit too young to be able to get the credit finance or the credit line. We are speaking to banks, and we're also speaking to a fintech. It's a fintech startup that already has the credit line. So by the end of this month, I believe that we'll be able to make that announcement.
Okay, and can you tell us a bit more about the technical and design brain behind the company? Is there a vehicle expert that's within the company as well?
Yeah, so we've got engineer designers that are the sort of design engineers, I suppose, as well as the QC, the tech. You've got myself from the brand and understanding vehicles and motorbikes for the past 23 plus years. Plus, we built this vehicle, as I said, in the early days, we were saying to Kareem, as well as others, because it was all part of our market study, what do you need from a delivery bike? So we've built these vehicles based on fitting a need and solving a problem.
Okay, and I think you've answered this, but when will your delivery vehicle be available in the UAE, and when will you lease? Will you lease or sell only? So I think you've talked a little bit about the leasing, and it's a bit dependent on the financing side. But when will it be available? So when are those pilots starting with those larger customers?
They start first week of November throughout Dubai and Ras Al Khaimah.
And those are some pretty big names. I know you can't say exactly who are doing those pilots.
It wouldn't be right to say the trials, but also it's not right for me to say the customers that have actually bought and paid as well, because they're developing a huge PR, social, environmental, sustainable announcement surrounding this. So it's quite a big activity for them, or for us as well.
And yes, of course, for the question, will you send the presentation to us? Of course, yes. It's available on the Eureeca site, but I'll make sure to do that and connect you with Adam as well. So thank you for that, Mohammed. Let's put this in here. Okay, I think we're going to try and get through again a couple more, and then we may need to move on here. So how does it fit in with the on-demand sharing agency with eCar and UDrive, for example?
Oh, very good. In the UAE, the soft, or say shared mobility surrounding micro-mobility isn't quite developed yet. The regulations policies aren't quite in black and white at the moment. However, we are working with the RTA very closely. We've got a wonderful relationship to help them understand, also for us to understand what their needs are to find that problem. So we are planning, and we've been asked, and I hope this is all right to say, that what eCar and UDrive are for, say, per kilometre in terms of transport, and what Kareem are for bikes, we're going to be hopefully offering the solution for motorcycles and other transport forms.
Well, without saying too much, I think there's somebody I can connect you to there. So I will do that after this. I've had a private message. Okay, so we've got any limitation on weight. So I assume that's for the riders, but also the delivery cargo.
So yeah, there's 150 kilo payload. Although I think it's 180 actually. It's 180 kilos, and it's all on the spec sheets, and they're all downloadable from the website. And for the delivery van, it's 1,500 kilos. Again, all the stats and facts of the vehicles are available on the spec sheets that you can download to be 100% accurate.
Okay, and then we've got a couple of questions about safety. So have they been safety tested and crash tested?
Absolutely, yeah. When I said right at the very beginning, we're approved, certified, registered, all of our vehicles have EEC certification. And for those that may not know, if they're allowed on the European roads, that is the highest benchmark globally that other governments and other legislative transport agencies look at. And all of our vehicles are EEC registered. So if they're allowed on those roads, we have to supply the EEC certificate in order to have them approved on the roads of the UAE.
Okay. And okay, I think we've talked a little bit about the traction you're getting with credit providers in regards to working capital requirements, but we can pick that one up again later through emails. So as you mentioned, you're already in talks with a fintech, and you've also had some conversations with banks, and there are
absolutely. But One last point on that is we don't need to, if we get an order for X 100 vehicles, we can just get that individual credit line and then go to another, depending upon the financeability of that lender, we can then start increasing. So to answer the question earlier about what do we need in terms of capital, it depends upon the orders that come in. So anyone that we have the discussion with will find out what that scope or what that budget is, or what that potential investment is, and then just take tranches as per orders come in.
Okay, and last two questions, and again, apologies that we're not going to get through all of these questions, but we will come back to them via email or through connecting you with Adam. So how long will the current funding round last? When is the next funding round anticipated? And also, the second question is, when are you planning on turning cash positive? Those are the two finance questions we have here.
Okay, you'll have to download the finance to know, but I believe if we meet the target, will be cash. We operate negative cash conversion cycle, so in terms of cash positive, we are on every sale. If you then start looking at the operation, we've got very low burn rate, and I believe it's in month 5 from September, maybe August. So sorry, from month 5, so it'll be May next year. May, June next year, but to be accurate, all the financials are on the that you can download. What we're looking at investment-wise is, I believe that Eureeca closes around the 31st of December, and then we're going to be looking potentially at a working capital round, which will be around $1 to $2 million as of next year, which will be very much focused on growth. I don't actually believe we will need to go for working capital if we just start achieving the results by the end of this year, which we've already signed some contracts. If we then look at the manufacturing, which will then be at, say, towards the end of next year, we'd be looking at a 5 to 10 mil raise, obviously all dollars, but that will then come with a very different valuation as of today.
Perfect. So we will connect you with all these other investors. There are a lot of questions coming in for you and One Moto, so that's absolutely fantastic. Adam, thank you so much. If you could stop sharing your screen, we'll move on.
Thank you very much for all your questions.
Perfect. And if you could just go on mute, I will introduce our next entrepreneur. So you may have heard the term no code being used a lot recently. It's a topic that has generated a lot of interest and is the focus of our next entrepreneur, Dushyant Bhatia from Bhatia Labs. So Dushyant has already experienced a great deal of success with another venture, and he's here to tell you a little bit about that and about Bhatia Labs. Dushyant, over to you.
Thank you, Sid. So I will start this pitch by introducing myself. I'm Dushyant Bhatia. I co-founded a digital-first creative agency in 2010 and have scaled it to 3 countries with over 180 plus team members and over $10 million in annual revenues. Over time, I realized it was difficult to scale further as our prices were getting higher and smaller businesses could not afford us anymore. And that is how Bhatia Labs was born. Bhatia Labs was formed in November 2018 to cater to the needs of 3 kinds of customers across the globe. Small businesses like salons, spas, groceries, plumbing companies, etc. Professionals like dentists, real estate brokers, insurance brokers, etc. And resellers like freelancers and boutique agencies who could sell our products and services to their clients and while making a decent margin on them. Our vision is to provide affordable, on-demand and no-code solutions with a cancel anytime policy for small businesses and non-tech entrepreneurs globally. To achieve this vision, we have introduced 3 offerings: designoe.com, bana.com, and serverfellows.com. Designoe. With designoe.com, we hope to disrupt the design agency model. For a fixed fee of $369 a month, we provide unlimited designs, unlimited revisions, no long-term contracts, and a cancel anytime policy. Imagine having a 100% multi-skilled remote design team working on your brand at a fraction of a cost that you'd be paying to a full-time designer. This is how designoe.com works. We have built our own proprietary dashboard where users can log in after subscribing to our service. All they have to do is submit a design request. They can have an online chat with their account managers and get their work done. Once the creatives are approved, we move on to the next request in the queue. No phone support, no email support, no meetings. Everything happens via our dashboard online. It is a truly 100% remote and a process-driven productized service which could be scaled globally. Bana.com. Our next product is a no-code website builder which allows non-tech and small entrepreneurs to get their own website up and running within a day. How are we different from other website builders out there? Our revolutionary drag and drop technology is a key differentiator. Let me show you with a small 20-second video. We have built blocks for each and every component of a website, like navigation bar, header, contact form, team, testimonials, etc. As you can see, creating a website is so easy that users can drag and drop different components, different blocks for each component of the website. All the user has to do now is just change the color, font, content, and upload the images. As you can see in this video, we just created a simple landing page structure in 20 seconds. Some other competitive advantages that we have against our peers. Many of you must have heard about WordPress. It's a great platform. However, it has a lot of challenges when it comes to do-it-yourself or non-tech entrepreneurs. To make a website on WordPress, one needs to buy web hosting, install WordPress, install a theme, customize the theme, install plugins, and finally keep on updating the plugins and themes to avoid having any kind of security issues. A spa owner or an accountant or any other small business owner neither has time nor capabilities to do all of the above. And that's where we come into picture. When it comes to other cloud hosting website builders like Squarespace, Wix, Weebly, etc., the problem is that the themes are beautiful, but they are not conversion friendly. Whenever you try to customize the theme, the mobile responsiveness gets severely affected, which gives a very bad user experience on mobile and other devices. 70% of all traffic comes via mobile, and Bana ensures that all our blocks are compatible with not only mobile devices, but also iPads and other tabs. Finally, our third offering is web infrastructure support. This is a great add-on for all our Bana users. Once the user gets their websites up and running, the next thing that they look for is email hosting, SSL certificates, cloud storage, etc. Out of all the new business websites that are built on Bana, 45% of them have subscribed to one of the other services of Serverpillows like email hosting, purchasing SSL certificates, etc. So it's a great upsell, and a recurring nature of revenue makes it pretty lucrative. What have we achieved so far? In the last 18 months, we've introduced 3 brands which have 175 plus paid subscribers comprising of both businesses and individuals and contributing to $10,000 in monthly recurring revenue. So every month we're making 10,000 plus in automated monthly recurring revenue via these 175 paid subscribers. We had a good September 2020 as well, where we managed to get 27 new subscribers. By the end of December 2020, we expect to touch a total of 275 paid subscribers. We hope to achieve the break-even point in the year 2023 and hope to cross $2 million in EBITDA in 2024. Our target would be to attain 20,000 subscribers by the end of 2024 to achieve $16 million in revenue. We're seeking $400,000 in exchange for 7.27% in equity. How do we spend that money? 15% of proceeds would go towards our infrastructure cost. 30% would go towards product development. We've launched an e-commerce module on Bana, which is live on beta, but we would be making the same live in Jan 2021 for all the small businesses. So small business owners can now get their own online stores in January with a starting price of $19.99 a month. 35% of our proceeds would go towards marketing and lead generation activities, and 20% would go towards hiring of remote team members, especially the designers for designway.com. In terms of exit strategy, we anticipate a possible acquisition by a global competitor taking place in 5 to 7 years. Alternatively, we plan to offer a share buyback to all our shareholders investing in this round a few years from now. That's it from my end. I'd just like to end by saying that I have given my last decade to an advertising agency and scaled it to where it is today. And I intend to give my next decade to this venture, and I hope you would be, hope you all would like to join it. Thank you.
Thank you so much, Dushyant. Thank you. That was excellent. Let's jump straight in. We're running a bit behind on time. We're going to jump straight in with some questions. So let's have a look here. Okay. Can I create an Arabic language website on Bana?
We are working on a multilingual capability. We've actually got a few Arabic websites online right now, but there was some manual involvement from our side. But currently, we are working on a language, a multilingual capability as well. Hopefully, that should go live by December this year.
Excellent. And okay, of the 175 customers that you have, what countries are they from? And can you share a percentage of the countries from where you've got those subscribers?
All our subscribers at the moment are from, I'd say 90% of them are from UAE, primarily because all our advertising, the marketing campaigns that we are running on Facebook, Instagram, and other platforms are primarily in UAE. Apart from that, we've got some customers from India, but all of them have been word of mouth. We've not spent a single marketing dollar exploring other countries. At the moment, our core focus is UAE and then GCC. We'd like to be a market leader in GCC before we explore other markets.
Great. And what is your valuation?
At the moment, we are running the company at $6 million. This has been in line with all our other peers. In fact, most of the peers have been able to raise the money at this valuation by just having a prototype. We have these 3 brands and also a decent monthly recurring revenue.
I think there's an interesting point to make on valuations as well. So for those of you that don't know, there are, for certain businesses, discounts available if you invest through the Eureeca platform, depending on how early you come in and invest in the deal. So Bhatia does have a small discount available if you go check it out on the Eureeca website. There also, if you are investing a larger sum of money, there are also there is a threshold over which you're able to discuss specific terms. So if that applies to you, please do contact us or reach out to Dushyant directly, or any of our other entrepreneurs for that matter. Okay, what is your customer acquisition?
At the moment, we are looking at. I'm talking about CPL first. That's a cost per lead. So each lead comes in at $12, and our conversion rate on an average is 12%. So that's approximately $15 into $120.
Okay. And what type of payment gateway integrations do you support specifically in the UAE?
At the moment, we've actually formed a US-based company. So we are using Stripe as our payment gateway.
Okay. Can new customers migrate their current website to your website?
Not at this point. We are currently developing that. However, we have this option of users migrating from our website, from our platform to other hosting if they choose to, which no other cloud hosting website builders have. Currently, we are working on coming up with a module that would allow users to migrate from WordPress to our platform.
Perfect. And okay, there's another one for design. Do you work on Arabic designs or only English? I think you said you're building out some Arabic functionality as we speak, but you've been able to do it.
That's for website builder, but for design way, we have Arabic designers. So in case you have, in case the design requests come in Arabic, we do it.
Perfect. Thank you. And apologies, that was my misunderstanding. Okay. Okay, so for the UAE customers, you said 90% of your customers are from the UAE. Are those landing pages, or are the websites doing more like e-commerce and so on?
So at the moment, we are not. At the moment, as I mentioned, the e-commerce is in beta. We've just launched 2 e-commerce portals because we've helped them get their web shop up and running. However, the self-serving e-commerce platform would go live in Jan 2020, and in terms of landing pages, I'd say around 40% of them are landing pages. The remaining 60% would be corporate websites. There is one insurance broker who has made a 34-pager website on our platform.
Fantastic. Okay, and what are your operating costs? And it says your percentage of full-time employees. Okay, so how many of your employees are full-time versus part-time, I guess? And what is the attrition or drop-off rate for unsubscribe so people? What is your churn, I guess, the question. So what is your churn of customers?
The beautiful part is I've shared the customer churn rate on this slide. As you can see at the bottom, 10% per month is our churn rate for Bana. We're talking about 5% for server fellows, because once you get your email hosting or any kind of web hosting from us, a user only switches to another platform if they have a bad experience or if they're not able to send or receive emails. And for design away, it's 30%. So not because they have a bad experience, but because at times they don't have any more work to be done. So let's say you get a client who comes on board for just a logo and a few creatives, right? At the end of the first month, maybe there are no more requirements in terms of design. So they unsubscribe and they come back after 6 months and resubscribe for another set of tasks. And therefore the churn rate of design away is 30%. At the graph that you see on the above this churn rate, we have assumed the net monthly subscribers. So we have taken into account that we will be losing a certain number of clients every month, and this is the net number that we intend to achieve.
Perfect. I think that answers that pretty well. Okay, and what percentage? Okay, so on the same subject, what percentage of customers, or how many customers, have been with you for over 6 months?
The beautiful part about Bana is that usually when a customer comes, they pay for the entire year, right? So it's once they stick around for the entire year, and the 10% churn rate is based on the stat that we've had. So we've got, I think I'll talk about last year, probably June is when the first set of clients renewed. On an average, we've got 9% of them not renewed. The remaining 91% of them renewed for the next year.
Okay,
that's for Bana.
And how big do you think the UAE and GCC markets are?
See, it's one of the interesting stats is that a lot of small businesses who are coming online right now, they are moving from your self-hosted websites to cloud-hosted websites because of the convenience. And this market is likely to double across the globe. So at the moment, I'll talk about the global market share, something around $6.5 billion. And it is poised to grow at $13 billion in the next 5 years. And as I said, the concept is very scalable. So yes, when we start with UAE and GCC, all we need to do is just get our processes right, get our campaigns right, get our lead generation campaigns, get our conversion rates right, and then replicate the same model across different geographies. So we're not only looking at GCC. Yes, we'd like to be the leader in the market, in the GCC market, primarily because there's no other major player out there, right? So we have that first mover advantage. But once we establish ourselves in GCC, the next move is to probably look at other regions.
Perfect. And okay, do you have any account managers that speak Arabic?
We do.
Perfect. Okay. What is the size of your offshore team? Is everything managed in-house, or are you currently outsourcing or under any reseller arrangement?
So one of the things that we have consciously decided is to have 100% remote team in long term, right? At the end of the day, we want the processes in place in such a way that we could just replicate the same processes. So at the moment, we've got 10 designers. I've got 3 designers based out of Dubai and 7 designers working on our payroll, right? From countries like India, Vietnam, Philippines, Sri Lanka. The reason we have remote designers from these particular countries is because the time zone is similar to UAE. But however, if we decide to venture into, say, a country like USA, we will start hiring a remote team of designers from Argentina, Mexico, and other places where the time zone could be in line with the geography we are targeting.
Perfect. And is there a commitment for subscription? So do you have to commit to that full year?
We have a cancel anytime policy, except for Bana, which is a yearly thing. We will, however, switch once we have our own self-serving e-commerce platform up and running. Then we will give an option for users to have a monthly subscription without any kind of long-term contracts. At the moment, we have a 1-year contract since we're just starting out. But in the near future, we'll have monthly contracts with, as I mentioned earlier, cancel anytime policy.
Fantastic. So I think that pretty much covers it. There's quite a lot there, but thank you for the quick and quick, concise, but thorough answers, Dushyant. And thank you also for the presentation.
Thank you.
So again, the entire proposal for Bhatia Labs is available on the Eureeca.com website. And if you want to dive into more of the financials or details, there's also an option to request those private documents, which I'm sure Dushyant will accept. Okay, thank you so much. Dushyant, if you could stop sharing screen, we'll move on. Fantastic. Okay, so our next founder, much like Dushyant, is also a successful serial entrepreneur. He's founder of one of the largest recruitment platforms in the GCC, Gulf Talent. So it's my pleasure to introduce you to Yasser Hatami, who's going to tell us more about his latest recruitment venture, Bidayati, excuse me.
Thank you, Sid. Okay, I hope everyone's seeing my presentation and myself. Great to be here. Thank you, Sid, for the introduction. It's Yasser Hatami. I'm the founder of Bidayati, the youth employment platform. I'd like to start by sharing a personal experience which I had last year when I was on a visit to Khobar in Saudi Arabia. I was staying at a hotel, and the lady who was the receptionist in the hotel, she was a young Saudi lady, spoke very good English, and she told me about her experience finding a job. She recently graduated. She was unemployed for 6 months while actively looking. She tried different portals. She didn't have any luck, and eventually she found a job as a hotel receptionist. The job was shared with her by a friend on Snapchat. It was interesting for me how, her experience and how she found the job. The same day, I met executives at a hotel nearby, also in Khobar. They said that they were looking for a receptionist who spoke English. They advertised it on LinkedIn, on Takat, and a couple of other places as well. They had no luck. They lost some money advertising. The vacancy was unfilled for 3 months. And they eventually managed to hire also a Saudi fresh graduate through a referral on WhatsApp by someone who was sent to them on WhatsApp. What struck me in that experience was there was a vacancy. They needed someone with certain skills and qualifications and a certain salary level. There was someone who lived within kilometers of that vacancy who was qualified, willing to take that role, but these two were not able to find each other. And that's immediately showed me that there's a major inefficiency in the labor market, in the kingdom in this case, but across many markets in the region and even globally. So what I described there is what we see across the board. If you look at the Saudi market in particular, the young people primarily look for a job not on LinkedIn or other job platforms. They look for a job on Snapchat, on Instagram, on WhatsApp, Twitter. These are places where they go to first. And as a result, employers also are having to go there to find people. While they do get results sometimes, eventually, these are slow processes. They're inefficient. The vacancies tend to remain vacant for a long time, even if they don't require a particularly high level of qualifications. Many candidates remain unemployed for several months. And at the end, sometimes they end up taking a vacancy which they are not really interested in as a compromise, and which leaves both parties unsatisfied. Now, why is it that traditional job boards, traditional platforms are not working? Two main reasons for that. One is the widespread use of smartphones. All the young people are on the smartphones, and that's everything they do is on that. And traditional job sites, while they may be available on mobile phones, they're not really built and created for mobile. So they're not ideal for the mobile platform. And second reason is that traditional recruitment relies on CVs, and candidates are expected to have CVs, to have experience, to be proficient in presenting that. And most of young people are not very well trained on writing a CV, which is actually a hard thing to do. As a result, we see that less than 1% of youth vacancies are actually advertised on job platforms such as LinkedIn or other online recruitment sites. And this is where Bidayati comes into play. What we have created and conceived and created is a jobs platform which does not require a CV. It's very simple to use on a mobile. Users, without any prior training, they can engage with it, register themselves, give their information within a few minutes, and have a full profile, which is sufficient to match them to the right jobs. There is no CV required of the candidate. There is no detailed job description required of the employer. It's available in the local language in Arabic as well as English. It has a powerful AI engine that does the hard job of matching candidates to the right vacancies. It has a location-based element where we know exactly where a candidate's home is and where the location of the job is. And we use that in matching the jobs to the candidates. So people primarily get jobs which are sort of within walking distance, if possible, or close to their home. And finally, it's not only for full-time jobs, it's also for part-time jobs, sort of gig jobs, and also internships. All the needs that especially young people might have. Since this launch last year, we've had good progress in terms of signing up some employers. So several employers SMEs mainly have used the platform, some medium-sized and a couple of larger ones as well. We have made partnerships with universities, King Fahd University in the Eastern Province, Princess Noura University in Riyadh, have actually promoted this to their students as a way to help them find internships or full-time jobs after graduation. And we're also in discussion with other large universities in the kingdom. We've also been in discussion with government bodies who see value in the value that this platform can bring to the table in terms of the creation of employment for young people, as well as helping companies find talent. We've been appointed a partner for Munshaat to help the SMEs. Munshaat is, as you know, the SME organization in Saudi Arabia. They wanted us to help SMEs in Saudi find talent that they need faster and more efficiently. So as a result of all these, we've had good traction in terms of uptake by the employers. We've had over 200 companies by now signed up and having used the platform for their vacancies. We've had over 6,000 candidates signed up. I think 98% are young Saudis signed up on the platform and growing. And the critical thing is we have measured the success of the platform. So the metrics we look at, one is what share of the employers have shortlisted candidates. We see that 75% of companies have shortlisted at least 5 candidates on Bidayati. And critically, of those who've shortlisted, more than half of them have done so within 24 hours of posting the vacancy, which is quite unprecedented in the recruitment space, especially in the Middle East. And we've had a lot of compliments and positive comments and gratitudes from both employers as well as candidates, especially who have been able to find the talent they need or the job that they were looking for. A lot of those who find jobs is their first job after university or even while they're at university. How are we monetizing or planning to monetize this? So we are adopting a freemium model. Obviously, for candidates, it's free. For employers, initially, they can use it for free, a basic access where they can register, post jobs, and contact a small number of candidates. They can do that free of charge. And we expect a very large number of companies to take that up because there's no financial barrier to uptake. Then we have the basic level, which is primarily used by SMEs. Gives the main feature, which is the advertising vacancies and contacting the applicants, available, and they can have a higher limit on who they can contact. This is available at a relatively low cost. And then we have the enterprise solution, which has additional features. It's unlimited access to the candidate pool, and the monetization is much higher per company. About the management, myself, I'm the founder of the business. As Sid mentioned, I'm also the founder of Gulf Talent, one of the largest online recruitment platforms in the Middle East. I was previously a consultant with McKinsey. I have an MBA from INSEAD. I'm an electrical engineer by education, and also have a patent in the US for a domain related to HR technology. Gulf Talent has been a founding investor in the business, and the idea actually was incubated within Gulf Talent as a result of the gaps that we saw in the recruitment market, as I mentioned earlier. In terms of financial projections, we expect to reach just under $6 million in 4 years' time, and to break even in year 3. So to have a EBITDA of $2 million in 2024. These are based on assumptions about the market. It's about 1 million companies in Saudi Arabia, a majority of them SMEs, and based on the uptake we expect for each segment and the revenues that I mentioned. It's important to mention this is only for the Saudi market. We believe the idea has potential to grow well beyond Saudi, other markets in the region, as well as other markets outside the region who have similar sort of demographic profile, large numbers of young people, and high level of unemployment and demand by companies, as well as the affordability by companies to actually pay for a service like this. Now, while this is an enterprise, a profit-making enterprise, it also has huge social impact, relatively obvious given this domain. For young people, we help them find jobs faster, reduce unemployment, and increase their satisfaction by giving them jobs that actually truly match their needs and interests. For businesses, we help them increase their productivity by filling their vacancies faster, which is a real problem in the market. Get better matching candidates and therefore achieve higher staff retention, and also meet their Saudization targets. And this obviously benefits the country as a whole in terms of reducing unemployment, which is an economic as well as a social ill, and to reduce the financial burden on the state of supporting large numbers of unemployed people. Now, why is this a good time to invest in this space? Well, globally, HR tech and recruitment tech has been attracting significant investment over the last few years, and that's been growing quarter on quarter, both in terms of numbers of deals and dollars invested. An obvious question is, what about now that we have COVID? How has that impacted the market? The answer is there has been an increase in unemployment across many countries in the world, and including in the Saudi market. However, we also see that there is increased drive for Saudization because of the unemployment. So there's more pressure on companies, more incentives to go and hire Saudis, most of whom are essentially young Saudis in the job market. Candidates increasingly want to work close to their home so they don't have to commute and to avoid additional risk of infection. So local jobs is a significant attractive element. And finally, because of cost pressures on businesses, more of them are looking for hiring younger workers, which are available at lower cost. In terms of exit strategy, three key possibilities. It could be a strategic player globally looking to acquire this business as a way to enter the Middle East market. We could have financial investors looking to acquire either the whole business or shares of the initial investors, could be family offices or other institutional investors. And finally, because of the nature of the business, there could be demand from state organizations whose mandate is to help employment, and they could see this platform as essentially helping them achieve their objectives. Overall, we see that Bidayati in particular, while there's an opportunity in the market, Bidayati is well placed to capture that. We have a product that's very well made, very easy to use, proven to be easy to use. We have a very sophisticated AI algorithm, which is not easy to replicate, and it utilizes millions of data points achieved through the partnership with Gulf Talent, which again is not easy for any other player to replicate. We've priced it low to remove any financial barriers to entry. We are first to market in the youth employment space, and we have a management team that has a long track record in the employment and recruitment space within the Middle East. Finally, in terms of the raise, we are planning, we have a funding target of just under $500,000, so $450,000 at a pre-market valuation of 2.8 million. As you mentioned, some discounts are available on that for a period of time. We expect this to get us through the next 6 months and meet our growth objectives, and we're planning to raise a larger institutional round in 2021, next year. How are we planning to use these funds? About a third of that will go into product development, slightly over a third into sales and marketing, and the rest, the support functions, admin, legal, finance, and IT infrastructure. And in terms of milestones we expect to achieve with this funding, we will be launching a native app. We'll be signing up 1,000 employers and 100,000 job seekers on the platform. That's summary. Happy to answer any questions.
Perfect. Thank you so much, Yasser, and for telling us all about Bidayati and what you're doing. So we do have a question here. Can you tell us a bit more about your plans for geographical expansion? Is this likely to be focused on the GCC market, or are you looking to expand abroad quickly?
Yeah, so this platform is essentially filling a major gap in terms of matching young people to vacancies, and it's ideal for markets where there's large numbers of young people entering the job market every year. So it's not suited to every market in the GCC. Saudi is a very well suited market to that. Other markets like Oman and Bahrain, they are suitable in terms of the young people coming to the market, but the size is small. Egypt is a market that could fit well. Within Europe, we see some markets with large, similar to Saudi, large youth populations, high unemployment, and high GDP per capita. So Italy, Spain, those are two markets that we see opportunity in expanding this to.
Great. And then hold on, another one here. So okay, what is your main revenue generation activity?
So it's a subscription from employers is the main revenue.
Okay, fantastic. And who are your competitors?
So there's no one else doing exactly what Bidayati is doing. So a platform for employment of young people, and by young I mean sort of 16 to 25, 30. Anyone coming out of high school, coming out of college, or coming out of university, or maybe with a couple of years experience. There's no other platform doing that specifically. Within the broader recruitment space, yes, there's LinkedIn, but as I mentioned, absolutely is not working for this segment of the market. Very few people in this segment get hired through that. Our main competitors are social media platforms. So WhatsApp, Snapchat, Twitter. These are the platforms we seek to substitute by what we've created in Bidayati. There are a couple of other sort of startups who focus on specifically on part-time jobs. They have a very different focus and very different business model. A lot of basically primarily they focus on blue collar. Bidayati is primarily white collar, but some blue collar as well. Those platforms focus on typically retail and hospitality, which is a very sort of narrow segment. They also will focus on demand. So if you want to get a part-time job and you need someone for come in every week for the next 3 months, then you wouldn't use those platforms. You would use Bidayati. If you have one afternoon where you have a vacancy, you just need someone for 2 hours, then you would use those platforms. So those are sort of very narrow, and we don't feel they really compete or really overlap with what we're trying to do. So in our space, we feel this is the only solution of this kind.
So just and then a sort of request for clarification here. So who are you charging, employees or employers?
Employers, yeah. So for job seekers, it's free of charge. Employers are the ones who pay. As I said, it's a freemium model, so basic access is free, but there's very limited things they can do with that. As soon as they want to really hire, they will need to get a subscription, either short-term, it could be 1 month, or it could be long-term subscription.
Perfect. So, okay, I think there was just a misunderstanding there in the question. So I think we've cleared that up.
Sure.
What about advertising? Will you allow companies to advertise on your platform?
Yes, we would allow targeted advertising. We've had requests from, for example, government organizations who were running a competition, a boot camp for young people. They were trying to attack particular sort of segments to put them through a startup training and so on. So that's the most direct type of advertising we're getting requests for. There will be other things as well, like courses, education, and so on, which we see fits quite nicely with what we're doing and would be value adding to our users to add as well. Beyond that, just general, if you like, banking, credit card products, those things, we might look at it, but we want to annoy our users by flooding them with unrelated ads. So in a very controlled way, we would be taking advertising.
Fantastic. So I think if there's no more questions for Yasser, I think we're done and we're ready to move on. So thank you so much, Yasser, and thank you for everybody that listened in and sent in your questions.
Pleasure. Thank you very much, Sid.
Thank you. Okay, so thank you all once again for staying with us. I know it's you're giving up your evenings for those of you in the Middle East, and we really appreciate it. And we appreciate the opportunity you're giving to these amazing entrepreneurs. So next we have Nick Grande from Mina TV. Nick is a seasoned media executive who gave up his corporate career to start a consultancy some years ago. And has recently started up a B2B content marketplace, Mina.tv, and he's here to tell us about it. Over to you, Nick.
Thanks very much, Sid, and good evening, everybody. How are you doing? Thank you so much for staying tuned. I realize it's been quite a long evening, and I hope you're not missing out on your dinner. Well, I'll do my best to make it worth your while. My name is Nick Grande, and I've been a senior executive, as Sid said, in the Middle East for the last 20 years in the TV industry. I've been a successful entrepreneur for the last 12 years, managing over 200 TV channels on behalf of regional TV networks, such as Du, Vodafone, and Saudi Telecom. And through that work, we could clearly see that the whole market for TV shows was quite ripe for disruption, not only in MENA, but globally. And 3 years ago, with that in mind, I founded Mina.tv. So just first up, to avoid any confusion on the subject, Mina.tv is a digital marketplace. So, sorry, a B2B digital marketplace. So if we think about the marketplace industry more generally, Property Finder, Souq.com are hugely popular with investors because they offer growth through network effects. So, but what about B2B? Can you get the same kind of growth in that environment? Obviously, B2B gives you secure revenues and we're used to high transaction values. Mina.tv offers similar network effects in the B2B space as the B2C providers by connecting up TV streaming networks and TV producers and distributors and broadcasters. So what's interesting is that transaction values are typically high and they are intangible assets. So there are very low logistical overheads. So we're talking about a high revenue, high margin and high growth opportunity. And in the past, it's been a relationships driven industry. built around trade shows. So what we're doing is extremely disruptive. If we look globally for a moment, I'm sure you're all familiar with what's going on in the TV industry. I mean, Netflix in particular spent $15 billion last year. They'll spend $17 billion this year on original content. Disney is now one of the 20 most valuable companies in the world. They spent $28 billion and obviously launched Disney Plus this year. Apple, Amazon, Google, Facebook, AT&T, they're all getting into the content business. The story is similar in Middle East, North Africa. Content is very big business. Saudi Arabia is investing $64 billion in their content space. beIN Sports in Qatar spends over $1 billion a year on content. NBC, you may be aware, recently launched their own studio business. So not only are they a broadcaster, they're now a producer, and they are making shows to be sold not only regionally, but internationally. Their Shahid platform has a number of very, very high value shows being produced for it. In Egypt, you see streaming network being launched, Watch It, recently. Even the telcos like Saudi Telecom, Etisalat and Ooredoo are all spending tens of millions of dollars on content. And Saudi Telecom in particular investing a lot in original content through their Jawi service. So the market as a whole, there are about 400 companies buying TV shows in the MENA region. In particular, streaming networks have an enormous appetite for shows. If you take a company like Stars Play, one of the buyers in MENA, one of the buyers in MENA.tv, in fact, they offer consumers a portfolio of about 10,000 hours. And each of those shows can cost anything from $500 to $500,000 an hour. So they've spent almost all of their $200 million in funding as a startup, acquiring content rights. That is their moat. And on the sell side, there are over 6,000 companies around the world trying to reach these buyers, offering them drama, documentaries, kids shows, movies, reality shows. Just 2,000 of those companies spend, they will attend MIPCOM and the other big trade shows every year normally. They'll spend in excess of $30,000 a year on trade shows, many spending $600,000 a year on trade shows, but if they have large scale stands at these major events. So it's a very important investment for them to reach the buyers. MENA presents some specific challenges for them though, because content buyers are very hard to locate. They're spread across 20 countries. The sellers, of course, are spread all over the world. There are language barriers. More than half of the buyers in the MENA region don't actually speak English. If you think about the broadcasters in Sudan, in Kuwait, in Morocco, it's an assumption globally that English is the common language, but it's not the case in MENA in all cases. It might be in UAE, it might even be in Saudi and in other Gulf states, in Levant, but it's not universally spoken. Then you've got the challenge of payment and delivery of content. You can't always align them. So it becomes challenging. Deals can actually go astray. You can have trust issues that result from that. Some of the content vendors or buyers might find themselves buying from illegitimate vendors without even realizing they're doing it. And then added to all that, you've got these new startup streaming networks who don't even know the basics of how to buy content. They literally arrive, say, I want to be the next Netflix. How do I do it? So having a centralized platform helps all of these people. And this is what MENA.tv is. Like, we take this $3 billion market and we make it practical for everybody. It's free to sign up. It's fully bilingual. There's extensive search features for the buyers. You don't have to have a degree in TV to understand how to search for documentaries or movies or particular languages of shows or origins and so forth. And it allows direct communications between the buyers and the sellers. It's free to use, as I said, for accredited professionals. Our business model is a freemium model at the start. So we encourage as many producers as possible to showcase their content. And then we sell premium positioning on the website. We sell mail shops. We sell digital showcases. So we upsell to the producers. And we have a number of major clients already working with us. We also provide analytics tools, and we have services that we provide to companies like Disney, Warner Brothers, Viacom, Star TV. A lot of major businesses use our services already. This particular raise we're working on today is about supporting our platform development for next year. There's two areas that we want to work on. One is premium memberships. We want to make it possible for all our users, regardless of how big or small they are, to have an access, a premium tier access that would give them more data, access to insights about the market that will help them do their job. And then the really important tool for the growth of the platform is transaction level services, where we actually make it possible through a toolkit of digital signing contracts, hosting of mezzanine assets, which we can deliver directly to the buyer in the chosen format, and then the actual remittance of the funds to the seller. We can create an ecosystem around the transactions to make it possible and easy for far more transactions to take place. And then we take a small piece of that, either by way of a percentage or service fees. So already our network in the region is unparalleled. We've got an award-winning reputation. We've won awards internationally and regionally, and our brand strength is well known across the industry in regional trade shows and so forth. We organize events like the CEO Summit for the TV industry. And we have over 700 accredited buyers using the platform. On the client side, we have a significant number, almost 100 clients using the site. What's interesting is that number is more than doubled over the last 7 months for obvious reasons of the lack of a trade show infrastructure. We've been one of the net beneficiaries of the pandemic. Our client base now spans 25 countries across Asia, Latin America, Europe, North America, and of course, MENA. To give you some examples, we have a Japanese company, Nippon TV, one of the biggest in Japan. Intermedia, which is a huge Turkish distributor producer. We have shows like Bhatia Labs that some of you may know being sold through us. A company like Mediaset from Spain, their show on Unauthorized Living, which was on Netflix not so long ago. And so we've also more than doubled the number of shows on the platform over the same 7-month period. Quick about the management team. So we're a small team. On the analytics side, Tasabi is the primary source of all data for several international TV networks, as I mentioned. And Bilal, the marketplace coordinator and manager, his emails reach over 7,000 professionals every week. We're also supported in the raise by strategy, technology, and marketing experts. In terms of our market positioning, we're the only digital marketplace serving the $3 billion content market. Digital markets remain a new area, and we serve as many buyers as our global competitors do. So, for example, if you look at like a company down there like Beulah or Rights Trade, our buyer portfolio, in spite of our regional focus, is similar in size. We also provide access to exclusive audience and marketplace data, and that's probably what sets us apart from our competitors in the digital space. And certainly the trade shows, they don't tend to have that kind of tool available to them. And as you can imagine, things have been tough in the trade show sector. They're all trying to enter the space, the digital space now, but they're relying on models that are more about economies of scale across different industry verticals. And so it's more of a struggle for them to pivot. They don't have the ability to scale across different industries. In the meantime, we at Media.tv are growing and expanding our ecosystem. We already have proprietary marketplace analytics. We have audience data already for the last 3 years for 500,000 TV viewers. Just last week, we signed exclusive rights agreement with a UAE operator, giving us viewing data for a further 4 million TV viewers. We have another exclusive partnership with a UK company, which gives us access to smart TV viewing data across the whole MENA region. And we're in advanced conversations with major TV networks about these services. So what does this all mean in terms of financials? Well, the revenue and margin growth opportunity is significant because it's a digital marketplace, particularly when we introduce those transactional services I talked about. Almost all our investment for this raise is going into the platform development. That means about 163,000 of the $200,000 minimum raise that we're looking for. There are multiple networks that come into effect once we have that platform development in place. Buyers will be driving more sellers to the platform, more sellers with more titles per seller as confidence in the platform grows, which in turn, of course, drives buyers. But when we introduce the transactional component, we can see an ever increasing number of vendors availing the transactional tools, which again drives the network effect further. So that by the time we get to year 5, we're looking at close to $9 million in revenues, about half of which is transactional services. So I've given you already an insight into what we're looking for fund-wise, and it's entirely dependent on this investment into technology that we're working on. I say entirely, that's not quite fair. We have a deep and long-standing engagement with, which is unique to our business, with the industry, and particularly the MENA industry. But what we're doing here is unlocking that in a way that has not been done, actually, period, because what we're offering that perhaps isn't being offered by other marketplace businesses is an ecosystem, not only the tools for buying and selling content, but also the tools for engagement to keep people coming in. So as I mentioned, 160,000 of the funding will go into the platform development. The remainder will be invested in increasing outreach to buyers and sellers. And we're looking at a similar spend in 2022. So the 2-year funding is where you see that 447 figure coming from. A lot of things that weren't put into the model but are worth mentioning revenue-wise. So already we're having interest from partners in Africa, Russia, for example, for global expansion, taking the MENA.TV and applying it in other regions. There are other verticals which are specific to the TV industry, which are available to us, listed there. One in particular I'll highlight is dubbing and subtitling. If you think about it, you can't sell a South American TV show in MENA without having it dubbed or subtitled. Well, dubbing typically costs a minimum of about $2,000 an hour. So for a 10 episode show, you're looking at $20,000. So, you know, with our positioning, we're obviously uniquely positioned to participate in a transaction like that and become a key funnel for growth. Finally, then, if we look at our exit opportunities, I'll just highlight 4 here. There are several more, but just to consider any media conglomerate wanting to tap into the growth of the content sector. There are several government entities, which we're all aware of, particularly the GCC, that want to own the media space. This would be a very good vehicle for them to do that. Trade show operators seeking to stay relevant, and competitor networks, maybe not straight away, but assuming that one of them in 3 to 4 or 5 years' time can achieve scale, then we would provide a much more cost-effective way to enter MENA than trying to compete. So I hope that gives you a clear picture, and thank you very much. Over to you, Sid.
Thank you, Nick, and thank you for that. So we have a couple of questions here. One was about the rise in sort of in non-Hollywood and non-sport content. Do you see? I know that we've seen, for example, I guess this relates to, you know, we've seen some Turkish productions come online in the UAE and be very popular. So are you seeing an increase in that kind of production, which would be good customers for MENA.TV platform?
Absolutely. I mean, in terms of MENA demand specifically, if we look at the audience side for a moment, kids content is extremely popular. It indexes much higher than anything else, apart from maybe movies. If we look at documentary content, it's very popular, particularly with general entertainment channels, you know, the big state broadcasters and so forth. Another opportunity, which probably I didn't highlight in the presentation, which is Arabic content production. The investment in Arabic content production is going up so much that there's a big export opportunity that is starting to happen now. So my presentation has been predominantly focused on the inward market, the MENA buyers themselves, but there are numerous opportunities for coming up for high value Arabic content. People might be aware that Netflix, if you don't know, you will know now, 9th of November, I think they're launching their first Arabic original internationally, a show called Paranormal, which is looks like a fantastic show made in Egypt.
Fantastic. So, okay, we have if the other panelists could go on mute as well, that would be great. Okay, so we have another question here about data. So you've mentioned data, and the question here is how are you going to monetize that, and who would be the typical consumers of this data, the typical purchasers of this data?
Sure. Well, firstly, we have an existing data product we've been working on selling for the last several years, 3 years, and that is monetized with the broadcasters, and we have a monthly report structure for that. But that's what I would call the 1.0 data solution. I mean, the next stage, which we're already implementing, is to provide tools that go out to the vendors that give their marketplace insights, because as you can imagine, all of these 90 or so vendors, that most of them know very little about the market structurally. They just know when they made a sale. But the thing what we really want to do is to introduce subscription level, user level data services, which is where we actually layer into the when you're looking at a TV show, there is some data which is immediately available from the vendor, but you'll see other data which is there's a padlock in front of it, where if you want to know, for example, how well the show does audience wise, where it's been sold, even indicative pricing information about the show. This is essential both for buyers and sellers. So what we'd expect and how we forecast for this is that the service would be relatively inexpensive. We're talking less than $1,000 a year on a monthly fee basis, and the user would basically have a professional subscription for that. We're looking at about, if I recall correctly, about 15% penetration of that service.
Fantastic. And just to end it with, we have a potential customer for you. So someone's asking, how can I sell my family content on MENA.tv?
Well, I'm glad you asked. It's first of all, if you look to the website, there's a little box in the right-hand corner called Sell Content. If you click on that, all the instructions on how to sell it there. You can drop me an email. My email address is right on the presentation. I'll happily look into your query personally. Bilal will make sure you're up on the site in no time. And just to reiterate, it's free. So, the initial listing is not going to cost you anything, and you'll get exposed to those buyers.
So that's a perfect way to wrap it up. I always like to see some of our businesses getting customers as well. It shows we can be multifaceted with these pitch nights. So Nick, thank you so much. And I know it's been a long night, so if you could turn off the screen sharing, and if all the panelists could just turn on their videos, we'll do a quick recap for everybody that's still here. So I'm just gonna, if you could turn on your videos. Perfect. Fantastic. Okay, like I said, I know it is late, and it's it's in the evening. I think we're about 9 o'clock in the evening here in Dubai, for those of you based over here. Amr, I know it's even later for you in Bali. I don't even want to guess what time it is there.
Yeah, it's almost 1 p.m. of 1 a.m. That's okay.
Yeah, well, thank you for bearing with us, and thank you for the fantastic pitches.
Yeah, thank you so much.
As a quick recap, so we heard from Amr about Nooboo, the bamboo apparel company. We heard from Adam about the future of electric vehicles in the UAE and beyond, specifically for delivery and food delivery. We heard from Dushyant about his 3 no-code platforms. So Design Away, the design platform, Bana, which is no-code websites and landing pages, and Server Fellows that offers hosting as well. We then heard from Yasser from Bidayati. Yasser is the founder of Gulf Talent, and he's come up with an innovative solution for young graduates, particularly in the GCC, but also looking abroad. And finally, we heard from Nick Grande from MENA TV, telling us about his B2B content platform and how that's going to be the future of content distribution, both in the region and abroad. So if you're interested in any of those businesses, please do reach out either directly to entrepreneurs, or you can reach us at investors@eureeca.com. As I mentioned, you can check out the proposals on the website. And yes, thank you all. And I hope you'll enjoy the rest of your evenings. Take care.